all of the reasons people have been buying gold for the last 3 years. Central banks wanting to diversify their assets away from the dollar in the face of dollar weaponization. Chinese non-official Chinese investors concerned about the devaluation of the yuan and the stability of their banking system buying gold. Big wealthy investors in the Middle East and Asia particularly, but also in the US, people like Dalio and Jamie Dimon. People buying gold because they're concerned about the fiscal deficit. None of that has gone away. None of that's gone away. And Trump didn't cause any of those problems, but I think it's, at the very minimum, it's fair to say he hasn't diminished their impact.
Wow.
So yeah, I mean, I think gold's going to be much higher.
Adrian Day, CEO of Adrian Day Asset Management, emphasizes that such a pullback would be a prime buying opportunity. Historically, this is a strong seasonal period for gold, so a decline would be counter to typical trends and thus present a favorable entry point for investors. Day expressed confidence in significantly higher gold prices ahead. Gold prices remained steady on Tuesday, trading near $3,334 per ounce, as investors weighed safe haven demand sparked by renewed U.S. trade threats against rising U.S. Treasury yields. Spot gold dipped just 0.1% in early Asian trading, while U.S. gold futures held firm at $3,341.80. Day warns that while long-term shifts unfold slowly, they can suddenly accelerate. He points to the U.S. dollar's shrinking global reserve share, from 78% in 1999 to 47% today, as a sign of eroding dominance. Since Trump's new tariffs began on April 2nd, the yuan has gained 1.5%, reflecting growing doubts about U.S. policy and a weakening of the dollar's traditional safe haven status. Day notes that there were several $100 million in outflows from gold-related funds just in the past month, and that the GDXJ, a junior gold miners ETF, has not seen any meaningful inflows since August of the previous year. However, the broader picture remains more optimistic. According to the World Gold Council, gold ETFs collectively recorded an impressive inflow of $38 billion in the first half of 2025. These inflows added 397.1 metric tons to global ETF gold holdings, underscoring the continued institutional demand for the metal as a strategic asset amid macroeconomic uncertainty and evolving monetary policy expectations. Before we dive into the video, make sure to like, share, and subscribe to our channel. Don't forget to hit the bell icon so you never miss an update.
And I would say the corollary to that is, yes, if something's inevitable, it can go along slowly deteriorating for a long time, but everybody thinks everything's hunky-dory. But you reach a point where it suddenly goes out of control. I think we're going to see that, by the way, with the use of the dollar as a reserve currency. I think we've gone at the beginning of this millennium, 1999, something like 78% of all foreign central bank reserves were in US dollar. And then 5 years ago, it was like a 65%. Now it's down to 47%.
Yeah.
And once you get up, that you reach a point where it falls off a cliff very rapidly. But I think we're going to get the same sort of thing with the debt. Already, as you know, as everybody knows, debt service in the US, the debt service is now the largest single item on the budget. It's bigger than defense, it's bigger than Social Security, it's bigger than Medicaid. So that's the imperative to bring rates down. I think that's the bigger imperative than the economy. Arguably, perhaps some sort of peace in the Middle East, perhaps, and some of the other Arab countries wanting to join the Abraham Accords. That would be a very positive. But we don't seem to be getting anywhere in Ukraine, but certainly in the Middle East, that's calmed down. We didn't get to World War III after Trump dropped a bomb. We've got the prospect of a lot of new trade deals with different countries, including China and Korea and Japan. Some pretty significant trading partners. The European Union says they're very, very close to a deal. So all of that would be positive. And then the intransigence of, I think that's the right word, that's the word I was searching for, Powell's intransigence on cutting rates, because he doesn't want to look like he's just doing it because Trump told him to. So all of this confluence of factors would perhaps be the perfect storm, the perfect environment for gold to have a pullback. Having said all that, I'm not worried about it at all. If gold were to pull back over the next month or 6 weeks, and let's not forget this is historically a very positive time for gold, so it would move counter to the seasonal factors. But if we have a pullback, I just think that would be an amazing time to buy gold. And I'll close with this.
Yes.
All of the reasons that people have been buying gold for the last 3 years. Central banks wanting to diversify their assets away from the dollar in the face of dollar weaponization. Chinese non-official Chinese investors concerned about the devaluation of the yuan and the stability of their banking system buying gold. Big wealthy investors in the Middle East and Asia particularly,
Yes.
but also in the US, people like Dalio and Jamie Dimon, people buying gold because they're concerned about the fiscal deficit. None of that has gone away. None of that's gone away. And Trump didn't cause any of those problems, but I think it's, at the very minimum, it's fair to say he hasn't diminished their impact.
Wow. Yeah.
So yeah, I mean, I think gold's going to be much higher. And we haven't even talked about North American investors buying gold for what I'll call the normal, traditional economic factors.
Do you think they've shown up?
They're beginning to, just slowly beginning to. But you look at the flows into the ETFs and the funds.
Yes.
They're only beginning to turn. You look at the gold stock ETFs, look at the GDX. It's several hundred million of outflows just in the last month. GDXJ hasn't had any meaningful inflows since last August. So North American investors are hardly pouring their money into the sector.
Right.
But you do see some indicators, like the juniors are beginning to catch up with the seniors, silver's beginning to catch up with gold. You know, these are all indicators that investors, retail, whatever you want to call it, is beginning to come back. But I think I think that it's right at the incipient phase of that bull market.
Adrian Day comments on former President Trump's recent trade rhetoric, noting that just 6 months ago, Trump was threatening 100% tariffs on BRICS nations. While the latest proposal of a 10% tariff appears to be a step down, Day cautioned that if it's an additional tariff on top of existing ones, it could pose serious economic challenges. United States President Donald Trump on Monday extended a pause on his sweeping reciprocal tariffs to August 1st, while also sending tariff letters to some countries, warning they would be subject to new tariff rates if they failed to reach a trade deal with the U.S. by the new deadline. Adrian Day addressed the broader debate around tariffs, acknowledging that while tariffs are economically negative, so are all other forms of taxation. He argued that every country must generate revenue somehow and questioned whether tariffs are inherently worse than taxes on income, investments, or savings. President Trump has repeatedly suggested replacing the income tax with the revenues from his tariffs. Most recently, he wrote that he'd start by eliminating taxes for people making less than $200,000. Replacing the income tax altogether would require raising about $2.2 trillion in tariff revenue. That's how much Americans paid in income taxes in 2023. Replacing it for those under $200,000 would require $700 billion. Let's back to the interview.
You know, 6 months ago, President Trump was threatening 100% tariffs on BRIC nations. So this is quite a step down. But if it's 10% on top of other tariffs, that is a
an
problem.
Additional 10% tariff.
Yeah, if it's additional, that's a problem. You know, it's really interesting because a lot of, I think if I can step back, and I'm sorry, I think when you look at the whole sort of Trump economic and geopolitical policy, they're sort of all wrapped up together. I'm not sure that he's playing four-dimensional chess, but I do think there's a sort of grand strategy. A tariff is a tax, and countries have to get their taxes from somewhere. And so I ask my friends, a tariff is economically negative. There is no question about that. It's an economic negative, but so is every other tax. And a country has to get their tax revenue from somewhere. And so is a tariff any worse than an income tax? The tax is income, or taxes on investments? The tax is investments, or taxes on savings? The tax savings? Is it really any worse? It has economic consequences, but so do taxes on investments and taxes on savings. And you look at certain countries, admittedly very small countries, that are beacons, if you like, of openness and free enterprise, like Bermuda and Cayman and Bahamas. Where do they get all their revenue from? Bahamas. I lived in the Bahamas for a long time ago now, but they have no income tax, no estate tax, et cetera, et cetera, et cetera. All their money comes from either real estate tax or import duty. And import duty is the same, call it what you will. It's an import duty, an excise duty, a tariff. It's all taxing things that come into the country. I think, again, the problem with the Trump plan is, first of all, as we know, tariffs cannot replace the income tax. There's no way. It might reduce it a little bit or make it less than it otherwise would be. But we're not going to, in the US, we're not going to replace the income tax with tariffs. And it's a shame we can't get rid of tax A and B and C and say, well, that's what the tariffs has done for you guys. We're charging other people, but we've got lower taxes here. I think the biggest problem to me with the tariff plan is the messaging. Are we taxing China because they're stealing our stuff? And giving us fentanyl? Are we taxing Brazil because they're anti-American bricks? Are we taxing German automobiles because they put too many restrictions on our automobiles? Right. I mean, there is no one sort of message, and I to be honest with you, I think that's a bad. But anyway, to summarize, there's no question that tariffs are a negative. When I hear people who know better, not who should know better, but who do know better, like Jerome Powell, talk about he's waiting to see what the inflationary impacts of tariffs are, that's just absolute nonsense. We know theoretically and empirically that tariffs are not inflation. Tariffs are disinflationary. If anything, tariffs will lead the economy towards recession. Because you add money, you add a tariff to a good, and that reduces the demand. I think we'll get rate cuts this year, and if only because the dot plot last month, the Fed's dot plot, where all of the members say what they think is going to happen. 2.5 rate cuts this year was the average prediction. So that's the Fed members themselves saying what they think is going to happen.
Adrian Day's analysis highlights how complex Trump's trade strategy has become and what it might mean for the global economy. While moving from a threat of 100% tariffs on BRICS nations to a 10% proposal seems like a softer approach, Day warns that adding more tariffs can still cause serious economic problems. He offers a practical view on taxes, saying that every type of tax, whether it's on income, savings, or imports, has some negative effect on the economy. As the August 1st deadline for trade talks gets closer, countries are rushing to make new deals. The idea of replacing income tax with tariffs may sound simple, but it would require raising huge amounts of money without hurting international trade too much. Day also reminds us that long-term changes can seem slow at first but then speed up quickly, leading to big shifts in the economy. That's why keeping an eye on market reactions and global responses is important to understand where U.S. trade policy might be headed. Share your thoughts in the comments below. If you found this video helpful, don't forget to like it, share it with your friends, and leave a comment. Join our community by subscribing to our channel and hitting the bell icon so you never miss an update. Thank you for tuning in.